Hello, Big Trends traders. This is Price Healy with your weekly Options Accelerator product review. A weekly Options Accelerator was designed to help options traders find quick, fast moves in just 6 focused stocks that have tested and traded really well for us on both the upside and the downside. I'm going to walk you through that today and an overview on how Weekly Options Accelerator works. Just a reminder that everything that I share with you here is for your information and education only. Nothing recommended here should be considered a specific recommendation to buy or sell any particular investment. Of course, you know that you are 100% responsible for your own investment decisions. Big Trends and staff are not responsible for any trades you choose to make. We don't provide personalized financial, tax, or legal advice to any individual Big Trends. What we do is we take our weekly Options Accelerator research and we send it out through real-time email and real-time text alerts to your smartphone when to get in and just, or more importantly, when to get out. We never leave you hanging. So we'll get into that. We're going to walk through the big 6 names, which all start with these initials here, MCPWNG, and why we like to use weekly options on these big 6 names. I'll give you those names in just a second. The goal of this strategy, as with any good trend trading strategy, is to take your losses quickly and keep the losses small while letting the winners run to as much as a double. That's where we take out the full position profit if we hit a double on any trade. This leads to the fact that 80% of your gains in options buying will typically come from about 20% of your options trade. So you want to make sure you're getting that big upside on those best of best ideas. Walking through the concept of trade expectancy and a multitude of case studies here. The big 6 names, and they're not all names that you would necessarily think of as the most popular options trading names, but they test and trade really well. One is Macy's in the retail sector, ticker M. Canopy Growth in the kind of newly minted cannabis marijuana industry has really become a leader. CGC is a symbol for that stock. PayPal, credit card processors, very steady business, and PayPal, PYPL is the stock symbol. And then Weight Watchers, of course, as you know, in the weight loss business, WTW. Oprah Winfrey bought a big stake in that, helped catapult it to success, but also it's been very tradable on the downside too. NVIDIA is probably the biggest name of all of these. It's the artificial intelligence chip stock leader when it comes to getting into all kinds of things related to artificial intelligence and chip stocks. NVIDIA has certainly been a great play on the upside and the downside. Canada Goose, probably the least well-known of the 6, and the outerwear keep you warm market. GOOS is a symbol. I've got a chart for each of those. Our 2018 results, a $10,000 model portfolio, never putting more than $1,000 into trade. Over about 100 trades or so in the course of a year, ran up to $6,315 in profits when you add up all the gains and losses before commissions. Past performance doesn't guarantee future success, but we certainly were pleased with not only the upside potential of this strategy. That's a 63% gross profit on 10 grand. Or you could do it on any amount of money, but of course that is before commissions. Take your commissions accordingly out. If you pay too much for commissions, check with us at bigtrends.com. We can point you to brokers that do a great job in options on both the price point for their commission and the speed of execution. This service, by the way, can be auto-traded through select options brokers too. Call 800-BIG-TRENDS for more on that. But we're very pleased with that result, and it's driven by the fact that we leverage weekly options. Weekly options are options that typically exist for about 6 trading days, give or take. Some of these options weeklies may exist for multiple weeks, but we like to trade them even on a Monday or Tuesday into that week's Friday expiration. So it might only have 3 or 4 or 5 trading days left before expiration. We know we can be in and out in usually 2 or 3 days maximum on these trades. Sometimes we get in and out the same day. We're not trying to day trade, but sometimes every once in a while we have to get out quickly, or if we get a profit that moves that fast, we'll take it and run. So typically they start on a Thursday to expire the following Friday. You can have a targeted opportunity to trade all kinds of events, the reaction after earnings. We don't like to buy right in front of earnings with this service. We would rather trend trade the reaction after the news comes out in our big 6 equities here. Let's look at our first example. This is Weight Watchers. The bottom panel, the green line, is the ADX indicator, the average directional movement. That's really our driving factor here. We're looking for ADX to be coming from a low level and then starting to trend up. When it fits our service parameters exactly, with all of our moving average filters on top and everything else, you can see that we get a sell signal here when Weight Watchers finishes that 30-minute bar just under $31. We're buying a 35 strike put. If you're new to options, that means you got a right to sell Weight Watchers at 35 bucks a share. It's already at 31. That's worth $4 intrinsically, $400 a contract. Maybe we pay 5 to no more than 600 bucks to control that already $4 in the money option. And you see it goes from 31 to our exit price down around 28.75 and gets our double on just about a 7% move in the stock on the downside on just a couple of sessions. So, in one day out the next, you can see that that's something, if you can double your money over just a couple of sessions, the leverage potential here is about 14-1 against the underlying stock. It's pretty exciting. Now, when you break all the gains and losses down and say how over 122 trades across 2018 as our official total trades, you can see that our average profit per trade was $51.76 per trade. That doesn't mean that every trade is going to make that for you. Some win more, some lose money. But when you average them out, you say that your expectancy, as it's called, is what's going to get you there over time. And that averaged out to about a 5.2% profit per month to get to that 60% plus profit for the year. We don't compound our results either. We just go on a set, never more than $1,000 committed into any one trade in the options purchase that you make. You could do more or less, but always be consistent in your dollar exposure maximum per trade. This is Canopy Growth, CGC. You can see a lot of times it'll happen right off of the open. That first half hour in, it gapped up. Even though it looks like a red candle where it came back down, CGC was setting up the pattern at $46. We're buying a 42.5 strike call, meaning that we got a right to buy the stock on a call at 42.5. It's already at 46, worth $3.50 or $350 per contract intrinsically. And now we're just riding it from 46. It got to over 50 when we hit our ADX dynamic exit. ADX in green rolled down here. If it rolls over without our other trailing stop rules kicking in, we've got to get out there at 48.5. Stock's up $2.50, about 5%, and the option's up 43%. That's about an 8.5 to 1 leverage. That's healthy. PayPal, this is a downside example. PayPal was starting to roll over. And the directional movement lines, the negative directional movements in red on these charts, the positive directional movement in blue. That's how we determine what direction you want to trade when the ADX starts to trend up off a low level. You can see PayPal is trading about $82 on its way to a gap down there the next day at 77. 82 to 77, 5 points, works out to be about a 7% return, 7% gain on drop on the stock, made 100% profit on the PayPal 86 strike puts. And so again, we get that intrinsic value that's really, really steady, gives us tremendous cushion to even wait out a sideways move if ADX is still moving in our favor. We like these in-the-money options for that stability, and it's still a very small percentage of the stock cost. Why would you buy NVIDIA shares? 100 shares might cost you over 15 grand. We'll never buy an option over more than $1,000 or $10 a contract. $1,000 to control 100 shares is our cap. So that means if you're putting $1,000 into a trade maximum, you still get at least one contract no matter what. If we're putting, say, a $5 option out there, that could get you 2 contracts, et cetera. We want to try to be as close to that $1,000 per trade commitment without going over to keep very stable in our results. Here's a case where the first trade on NVIDIA on the downside, you can see results in a quick pop down. By the time it popped up, we give them back some of our profit. Only made 27.9% the next day as it hit we call our trailing stop. Once we get to a certain profit target, we'll go ahead and lock that down. You can see on the next trade, we got a juicier gain as NVIDIA just kept on chugging to the downside. What I love about this second example from the time we got in is there's a couple of points where you're getting retracements, and you think, well, aren't I going to get stopped out by that? And you can see the ADX in green does a remarkably stable job of hanging with it. It had the slight rollover here that caused us to get out. And then it went on to an even further decline. I don't care if I make 55% the next trading day if it goes on to an even bigger gain. I'm happy with those kind of numbers, and you should be too when you think about your trade expectancy, as we talked about. Here's Canada Goose when it's just breaking out above our moving average filter, and again, the ADX upturn, the positive directional movement in blue is above the negative in red. That means we've got a net new highs kind of market where the stock's breaking out. Another case where Goose was basically in a flag pattern the rest of that day, but the ADX, while it slowed down, was not rolling over and then took off the next morning. You can see by the time we get a spike down the morning after that, it's telling us, okay, at the close of that bar near $54, you got to hop out. Stock's up about 6%. We make 56% of the options, about a 9-to-1 leverage ratio. And so, you can see how these patterns work. One more here with Macy's. We're not going to always catch every single move. You can see in this case, Macy's was already going down. This first leg down didn't quite fit our parameters until it started to really get humming on the downside. Stock was trading about 33.75. We're buying a 35.5 put, only paid $1.56 for it, and we're making 53% the next trading day. You can see, and that exit's happening after we'd already given back some of our decline. So we got close to our double target, got to about 85% gain, and then hopped out at 53.8% as our trailing stop rule kicked in. So again, if it gives back too much of our profit, we're going to say let's protect the profits and not be hair trigger about it, but certainly be sensible about not letting a nice winner turn into a loser. We give real-time instructions to tell you, typically just after a half-hour bar closes. This was one we said get into a NVIDIA March week 2, 150 strike call. That was the second Friday in March. We give you the symbol. We give you the maximum price to pay. Our average auto broker fill was $9 on this one. And this one we got stopped out on later that same day, down about 17.5%. So not every trade works. I like to point out losers as well as winners, because typically if we can make a double on a trade, I don't mind that we could take a 20% loss here or there. But we're going to try to keep those losses really small while letting the winners run. So the keys to success in weekly options accelerator trading is you got to have that catalyst. For us, it's that ADX configuration where it tells us we've been in a dead zone for a while, and now we're getting really ready to trend. We like to buy them in the money with that higher delta, and with these price points on these stocks, really setting us up for about an 80% delta, meaning that we're going to, stock moves up a point in our favor, we're going to typically get about 80% of that move in the option. You're paying so much less for the option, that's where your real true leverage kicks in. The ADX turns will dictate the exits, or if our profit protection stop is in place, once we've got a gain of more than 30% in the option, we'll ride that ADX until that, or until the trailing stop gets hit. We get a double, we don't try to keep riding. We've learned that 100% gain, that's good enough to go ahead and book the position, lock it, and move on to the next trade. It's not a black box system. I give you video training updates and update every position every week on what I was seeing and what I'm seeing going forward with weekly video training. You can see a reminder on how this has worked over the past 12 months. In 2018, we were able to turn a $10,000 portfolio into over $16,000 on the heels of this kind of stability, having the occasional doublers, while at the same time, letting our profit protection stop not really give back too much of our gains. But when we're not right, we get out quickly. So if it's not working, don't be surprised if you get an exit real fast. We'll tell you how to manage that with real-time email and text alerts to your smartphone. You want to call 1-800-BIG-TRENDS for more information, or drop us an email anytime over to clientcare@bigtrends.com, and make sure you take advantage of the special offer on this page to get started accelerating your options trading portfolio with Weekly Options Accelerator. Thanks for being with me here. Trade well. See you soon.